Hey, what's up, y'all? Okay, let's talk about the yield curve. There's this cool website, USTreasuryYieldCurve.com. If you load it, it'll basically show you the current yield curve. Um, so I'm going to start at I'm going to start at the very beginning, just for anybody who's not familiar with this. So on the chart here, we're looking at the different interest rates for the various U.S. Treasury securities. So along the bottom, you can see the 1 month, 3 month, 6 month, and then the yearlies, right? 1 year, 2 year, 3 year, 5 year, etc., all the way up to 30 year. And up on the graph, you're seeing for each one of these what its interest rate is. And if you hover over, the data point, it'll show you there. So for the 1 month, and the date here, we're looking at the 9th. So this is this year, December 9th of this year. So 1 month interest rate is 3.81, right? You can go through each one and look at each one, 4.3, etc. Okay. And so this curve of the various interest rates is just called the yield curve. Now, generally speaking, people, they will expect and they want for the yield curve to increase over as you move to the right. And as you can see here, we have sections that are they actually decrease, right? So if you come here from the 1 year all the way down to the 10 year, the slope is actually decreasing. Then it comes back up for the 20 year and it comes back down. So when you see the slope dropping like this, typically we want to, well, that's wants to be avoided. It's not a good sign. Um, so just to compare, let's look at like a non-inverted yield curve. What would people generally consider more normal, right? So I'm going to switch over to this other tab, and here we can see the date, have it set to 1991, December 13th, and there we go. You can see if you go, just visually looking at it, it's just always increasing as you get to the longer dated securities, right? So there's one not inverted, right? Let's check out another one, 2012, February. Also, slightly different profile on it, right? But still increasing. And then we come to today, and very different character there. So something else that you can do with this site here is if you want to compare yield curves over time, you can click this pin here. Like let's say, okay, I want to freeze this one on December 13th. So you hit the pin and it basically loads up another copy of the curve. And now you can scroll this one back in time and see, kind of how it moved with respect to the current one. And you can even, type in something like maybe let's say a year ago and just compare, how different they were. So there we can see the red one is the current one, and well, like the current date, so December 13th, right? And then so the blue one is what what we've been changing here. And then you can say, okay, I want to freeze that one. So hit the pin again, and now it's, let me see here. Let me scroll this one a bit. Okay, now it's moving. Let's see. I'll scroll it back a little more. Hopefully get a difference there. Let's see. Okay, so there we can see we've basically pinned this green one is from 2021, the red one is from 2022, and then the blue one is the one we're now modifying interactively. So as you can see, that's really cool and useful. Um, the challenge here, though, is you're having to click through various dates to get a feel for what it did over time, and you can snapshot it and you can get a rough idea, but it'd be nice if we could really see what the curve was doing with respect to inversion over time. Okay, so now we're on TradingView, and I have this indicator loaded down here. And that's basically the idea behind this indicator is to show the inversions in the yield curve over time. So what you can see, let's see, okay, these bars, this is basically the indicator down here, right? So you can see the bottom bar is for the 1 month, the 3 month, the 6 month, etc., all the way up to the 30 year. And so if you see a section of these bars that are red, that basically means that portion of the yield curve is inverted. Okay, so now we're looking at the yield curve on the graph again, right? And we can see there that, let's see. Okay, so we can see the 2 year is clearly lower than the 1 year. And so on the chart, on the indicator, we can see, so right now where we're at, the 2 years red, right? The bar is red. The 3-year is less than the 2-year, and so it's red, on and on. But basically, what you can see here is that from the 1 year all the way, well, sorry, I guess I should say, yeah, from the 1 year, I guess I should say from the 2-year to the 10-year, it's decreasing. Um, and so from here you can see, 2 through 10 is all marked red. Now, why isn't the 1 year included in that? Because on this particular day, on the 9th, if you look, the 6 month was 4.72 and the 1 year was 4.72. So the way the indicator works is, if see, the 1 year is not lower than the 6 month, and so it's just marked as green. It's only marked as red if it's actually lower than the security to the left. So as another example in here, we can see that the 20-year is higher than the 10-year, so it's marked as green, but then the 30-year is lower than the 20-year, so it's marked as red. So that's just basically how to read this. If you see like a contiguous block of red, it just means, at this point in time, that portion of the yield curve was inverted. And if, opposite, if you see a bunch of green all in a line, like at this date, it was green from the 1 month all the way to the 20-year. That means that the yield curve was increasing for for that section of the curve, and then only the 30-year was inverted. Okay, so now that you know how to read the indicator, let's look at it. Let's zoom out a little bit and look at it over time, and we'll include basically. So this is SPX, right? The graph on top, and we're looking at it since 1993. So we can clearly see these classic bear markets, right? This one, after 2000, and another one after 2007, and then the rally ever since then. Okay, and so you might notice some patterns here, right? The 30-year gets inverted for quite a while, and then you see some inversions here in the middle, and then it finally kind of clears up. You have a couple here at the bottom end, or at the short term, and then it kind of clears up. And then the same thing all over again. The 30-year inverts, you have some red in the middle. Eventually the 30-year clears up and you're back into the green. So one interesting thing here is that you can see the 30-year becoming non-inverted marked the bottom in both of these cases, right? So it cleared up and then started to rally. Same thing here, went green, and then after that it was, kind of got out of that bear market. But that's just two examples, right? I wouldn't say to completely rely on that. For example, if you're just waiting for the 30-year to non-invert and then just maybe go long, be careful with that, because you can see here it actually did non-invert for a while. But I would say you can see where it non-inverted, there was still a little bit of inversion here in the middle, and so maybe the idea is that you want that one to non-invert after a period of time where the middle has also cleared up, right? And then we'll look at this section in here. Interestingly, so the 30-year hadn't inverted, but we do see a lot of red here in the middle. This was pre-COVID, but so you can see a lot of the inversion that was happening here kind of cleared up right around the time of COVID and QE. And so now we're starting to see this pattern that we saw back here, where it's like, okay, the 30-year inverts, and now we see this middle portion inverting with kind of a slight difference maybe. We have a solid block of inversion here, but it's a little more skewed towards the longer dated ones, right? The ones over here was 1 year through the 5-year, there was this block, and currently we're at 2 through the 10, and we've actually had a couple of days in here where it was actually 1 through the 10, which is pretty interesting. And if you come back to the 2000 right here, yes, you had sections of time where there was a block of inversion, but you can see it didn't last as long as like this section or even the recent section here. So that's just one difference to notice. So something else that I'll mention here is you might be saying, how in the heck can the 1 month be inverted? Because there's nothing to the left of it. Well, what this indicator considers is it's looking at the reverse repo award rate. Like if you look at the yield curve, right? This is the 1 month, but the reverse repo is basically like the overnight rate. So it's an even shorter time frame. It doesn't show up here on the yield curve on the site, but the idea is that if if the 1 month is yield is lower than the reverse repo award rate yield, then it's marked as red. And the reverse repo yield data, at least from Fred, it's pretty much started right around here, and that's why you can see on the indicator the 1 month is just has no data before that because we're not showing it as inverted or non-inverted. It's just, there's nothing to really compare it to. So I'm recording this on December 13th, and you can see here the U.S. Treasury yield curve site has data for this day, and just wanted to point out that with the indicator, there actually is a slight delay with the availability of the data because it's getting the yield curve data from these symbols here, and these are basically and TradingView is getting these from Fred. So as of right now on the Fred site, they have for the 30-year, they have the most recent data point is from December 12th. And on TradingView, if we look at that symbol DGS30, here you can see it matches up the URL is DGS30 on Fred. And so this is the symbol on TradingView DGS30. We can see here that the most recent date is actually the 9th. So there is a little bit of a delay. And so this indicator, let me switch back to SPX. This indicator is, it can be used for like looking at the yield curve inversions historically. But because of this delay, it doesn't give you like maybe the exact date. It's or the right up to the minute or up to the day data because in this case it's just delayed by a few days. So right here on the screen you can see the different symbols for the interest rate data that I'm getting, and like I said, these are all symbols that are from Fred, and they work on TradingView as well. If you ever want more real-time yield data, TradingView also has this corresponding set of symbols, right? So on the 30-year in this case was US 30Y, and then the 20-year is US 20Y, etc., all the way down into the 1 month. So you can see the symbols here. So if you want to see exactly right up to the to the minute how these are trading on the market, you can get that data on TradingView as well. But I just wanted to point out that the indicator is using the more conservative approach of just using the official Fred data, which, like I said, in this case is just kind of delayed by a few days. So just keep that in mind. It's it can be used for looking at it historically, but won't necessarily show you like today's inversion curve. So if you wanted to add this indicator on TradingView, if you search for USTS yield curve inversions, that's the name of it on here. And so if you add it, it should show up the way it has here. I'll just show a strange little artifact of the indicator. Basically, if you expand, it's certainly designed to be in a separate pane from your main chart. And if you expand it, you can see there's the spaces between the lines kind of grow. And if it's a little too scrunched, it's just like the solid line. So you might want to adjust it to where there's a little bit of space between them. And if you're curious about the source code for the indicator, you can always, if you show your indicators here, and if you go down to the yield curve inversion one, if you click the symbol, the braces symbol, it will pop up the Pine script editor, and you can look at the source here. And this one is actually not that complex of an indicator, at least in terms of lines of code. It's only 51 lines long. These lines here, you can almost think of them as they're basically importing the various symbols for the different securities, right? You can see here the 30-year, the 20-year, etc. So we're just kind of getting those symbols into these variables. So here we have a function getColor. It just compares two different symbols, right? The idea is you'd pass in so here I'm passing in like the 20-year and the 30-year as A and B. And so if B is less than A, we return the color red. If B is greater than or equal to A, we return green. Otherwise, we return black. And so this next section, you can see it corresponds to, it's plotting a line for every row here, for every security. And you can see it, so they're all pretty, it's pretty uniform here, right? Here I'm doing the 20-year and the 30-year. That's up at the top. The next line is the 10-year and the 20-year. That's the second line, etc. And so this last section here is just to show the labels over on the right-hand side. This yellow text over here. That's what this last section is. And so if you open this, if you look at the source code in TradingView, if you come to the menu here and do make a script copy, it allows you to make a copy of this indicator. You give it your own name, and then you can change it and experiment with that if you'd like to. Okay, well, let me know if you have any questions or comments. And yeah, I think that's all I wanted to share for this video. So okay, thank you. Bye.